AppLovin is right back in the spotlight, and volatility has exploded after a short seller report accused the company of money laundering, allegations AppLovin has firmly and swiftly denied. That denial hasn't stopped the stock from selling off hard, though, and now the market is split down the middle. One camp sees this move as classic short seller driven panic and potential manipulation, while the other views it as the market finally pushing back on a stock that had been priced for near perfection. Trading volume has surged as investors try to figure out what actually matters here. On one side, you've got upcoming earnings and a recent analyst upgrade acting as potential catalysts. On the other, you've got heightened scrutiny around valuation, positioning, and just how sustainable AppLovin's AI fueled growth story really is. Layered on top of that is a broader industry concern: Google's new AI powered game creation tool. That announcement has sparked serious debate around the future of mobile gaming and advertising. Some investors worry that easier content creation could flood the market, pressure ad pricing, or shift monetization dynamics. Others argue the opposite, that more games and more engagement ultimately increase demand for performance advertising, which is exactly where AppLovin's AI driven ad platform thrives. The sell off also fits into a bigger market rotation story. High multiple software and AI linked stocks are getting hit as investors reassess risk, pull back from crowded trades, and question heavy AI related capital spending. For AppLovin, that means even solid execution might not be enough if sentiment continues to swing against expensive growth names. So, this has quickly turned into a textbook battleground stock. Short interest is rising, options activity is heating up, and sentiment is extremely polarized. Bears are betting that stretched valuations, slowing monetization, and execution risk still aren't fully priced in. Bulls believe the company's fundamentals haven't changed, the short report lacks substance, and the volatility is creating a rare buying opportunity ahead of earnings. At this point, AppLovin's next major move is likely less about one headline and more about positioning, sentiment, and whether earnings can decisively settle the debate. Until then, expect the swings to stay violent because both sides are heavily invested in being right.
Okay, yesterday, the 30th of January, the stock lost 16.89%. And as things stand right now, underlying trend is strongly bullish. The stock has been showing a lot of weakness, especially since late December. Yeah, is it? Yeah, late December has been showing a lot of weakness within that longer term bullish trend. Okay, lower prices are expected to continue to print out or play out up till the 20th of February. There might be an attempt after that to bounce, but it's indicating that they might not hold. But this is an extrapolation that is pointing to so many days ahead. What we can say is that in a very short time, at least up till maybe the 3rd of February, or probably towards let's see, Friday the 5th, Friday the 6th, there's a chance that it may continue to show this weakness we are looking at right now. Let's see now. We have been able to gather the data here on this daily chart, and we have got it digested on Claude. Let's see what we have here. Okay, so yeah, yesterday lost 16.89%. Appears to be a short seller report driven panic sell, not a structural breakdown. Key observations: price held above its S3 support on its 4-hour chart at $442.04 despite the violent move. Okay, so critical technical inferences. The 200-day moving average is at 495.44. Maintenance mode, it's gaining $0.24 every day. The 40-day moving average is at 640.83, gaining it's down, losing 70 cents every day. 21-day moving average also losing some $1.71 and $5 every day. 10-day moving average losing $2.4, $2.43 every day. All the short, intermediate, and medium term moving averages are bearish. Key insight: the 200-day moving average remains in healthy maintenance mode with accelerating derivatives. Okay, suggesting the underlying trend, as I indicated, suggesting the underlying trend still very much intact. The underlying uptrend is very much intact. Okay, market grid probability analysis. Okay, we have the market grid gives us a range of possible prices. It adjusts with the market conditions. Okay, if the stock expands, it will expand as well. If the stock is consolidating, it will also consolidate. It will contract the grid. It's just a range of possible prices. It doesn't. If I mean, as you can imagine, if the price is expanding and rising, it would also expand and keep on extrapolating higher prices. The range will widen, but if it goes quiet, it will continue to bring it down and contract. So we have the daily chart and that of the 4 hour chart. Okay, we also have a list of probabilities here. You can always pause and read. Okay, probabilities of testing various prices and time frames. There's no guarantee that any of those will pan out. There's also a trade setup here. If you apply it, you may not succeed. Okay, so it's not. It's just strictly for educational purposes. Okay, so the type is a mean reversion bounce play. Entry zone 463 to 470, so 473. Current area rationale is currently in between its S1 and R1 pivot zone on its 4 hour market grid. Target will be, it has an upper projection of 482.76, acts as a magnet. 200-day moving average, or the 200-day momentum of its of the 200-day moving average, the derivatives of that indicator are accelerating positively. Oversold and panic, not fundamentals. So your target will be 482.85, 75% probability, and this is the risk reward. Target 2495.44, where the 200-day moving average is. 55% probability. Risk reward is that. And the third target will be 504.44.40. This is where the R3 on its 4 hour chart is. 45% probability. Okay, your stop loss will be 452.81. Okay, that's also, it aligns with an S2 support on its 4 hour market grid. Okay, long term setup. The thesis: 200-day moving average trend maintenance with positive acceleration. The extrapolation of its 40-day moving average is $640.83, 35% upside from the current level. Yeah, yes. Short report refuted, equal to sentiment reversal catalyst. Analysts upgrade plus earnings ahead, equal to binary catalysts. Okay. Staged entry, you can see that there. And then you have your targets 528. This is the probability. 563.86, 50% probability. 588.97, 35% probability. And 640.83, 25% probability, and much more. Highest conviction play for our grid 463 to 482 range offers the best risk reward. Tight stop at 452.81. Quick 75% probability move to 482.85. Okay. Risk factors to monitor: breakdown below 452.81. Reassess probability, which is 20%. Google AI to impact, monitor earnings commentary, volume confirmation, need more than 8 million shares daily volume on reversal. What did it trade yesterday? 12 million shares, 50-day average is 4.4 million. It's also a high beta stock. Yeah, so it amplifies the market quite reasonably. Bottom line, this looks like manipulation driven dislocation, not structural failure. They told the day moving average, the health of that moving average plus grid support levels suggest high probability mean reversion, especially with catalyst ahead. Yeah, okay, just see what you make of app stock, and thank you very much for watching this video.